I even I don't know. This is not pensioners council. Today be another day when that's when the council see make I content now waiting we talk for council. So I know now maybe they talk man of this council. If you call me go retirement ambassador or pensioner choose. Now like that as I tell now last time say now waiting happen for our retirement summit. Now that's make I come the show now one today now last time we don't show now waiting our one of our elder talk that oh boy today now another elder waiting the talk now we come show now the other when we the show now today be elder Muda Yusuf elder Muda Yusuf waiting the talk now we want show now waiting elder Muda Yusuf talk he say elder Muda Yusuf don already talk waiting one man business owner go do when go make them enjoy good retirement. Now the thing say that Muda Yusuf don talk waiting one man business owner. People when they informal sector waiting them go do when go make them enjoy better retirement, enjoy good retirement. Now waiting that Muda Yusuf talk that Muda Yusuf for that summit. Now he be the person the ogbonge speaker where then they call the keynote speaker. Now he be the ogbonge speaker for that event. Mona watch, Mona listen to wetin the Muda Yusuf talk. Mona learn because he talk many things. So write down, learn many things. And you know say the Muda Yusuf na best when sabi well. Mona learn, Mona listen to wetin he talk. May God bless us.
The chairman of this very important summit, Chief Tom Boyd, Chairman FCI Basin, the President, Nigeria Council of Registered Insurance Brokers, Mrs. Ikoma Zebe, FCIB, representative for the MD Leadway Pension, MD Coronation Life Insurance, MD Royal Exchange Assurance, Dr. Femi Ekbeshola, President Association of Small Business Owners, our special guest of honor in absentia, that's the Commissioner for Insurance and Chief Executive Officer of the National Insurance Commission, Mr. Olusegun Omoshe, the DG National Pension Commission, Ms. Omalola Olura, our very esteemed discussants, the publisher of Spend Online and convener of this retirement summit, Mr. Chuks Okonda, distinguished guests, ladies and gentlemen. Yeah, it's a pleasure to be here, and once again I want to say good morning to all of us here. The nation as a whole has not been fair to pensioners, and this is very evident on a daily basis. Sometimes it seems that it's a cost to serve your country diligently and with integrity and without any form of corruption. That is the kind of picture that we are seeing as far as the story of our pensioners is concerned. And it's a major issue that we all collectively need to address. If we want people to be committed when they are in service. The situation is even much worse in the public sector. I know that today we are talking about the informal sector, but the pension story across all sectors, whether in the private or public sector, is something that really troubles one. All of us have witnessed protests by retired military people, by police officers, I mean, even those in academia. There was a time I was speaking to an emeritus professor. You know what it means to be an emeritus professor? That is the highest level of being a professor. That's the professor of professors. And the man was telling me that his pension was 400,000. This was the pension he was earning almost 15, 20 years ago. There have been no adjustments. And inflation is eating, eroding the value. The man was practically a penury. An emeritus professor. And the same thing happens across so many segments of our public service, and even in some private sector areas. So the challenge we are dealing with is not even limited to the informal sector. It's not limited to even workers in the informal sector. Even those who are employers in the informal sector, they also need to be properly sensitized about all of this. But more importantly, is that our government need to reward people who have served. They need to reward them better. Because the reality is that when it comes to retirement, it's a lot of anxiety on the part of so many people. It's not for nothing that people continue to ask for extension of retirement age. It's 60, then you now see protest, moving to 65, moving to 70. It's for the fear. And what people have said that people who have retired, what they are going through. So there's a lot that we need to do collectively. We need to raise our voice, to the government by way of advocacy. I know many of them are not even here, but we should continue to speak out in a way that will preserve the dignity of people who have served this country diligently and with all commitment. So having said that, let me begin by expressing my profound appreciation to the publisher of this pen online and convener of this summit, Mr. Chus Udo, for the privilege of sharing my thoughts with this distinguished gathering of industry leaders, regulators, practitioners, and stakeholders. And I also want us to especially appreciate Mr. Okonta. It is not easy to organize things like this. I've been in the chamber and I know what it is to mobilize resources, to get speakers, to get attendance, to book. It's a lot of work. Please, can we appreciate I also warmly welcome all participants to this summit. A summit that speaks not merely to finance or regulation, but to dignity, security, and the future of millions of hardworking Nigerians. The theme of this summit is meeting the retirement dreams of informal sector workers through insurance and pension instruments is both timely and profoundly consequential. It touches the very heart of economic inclusion and social protection in our country. And the president of NCRIP also mentioned this. This is about inclusion. This is about social protection, which we should all worry about. Because you don't want a situation where people will be in employment. And what will dominate their thought is that if I leave service, what is going to happen? For millions of Nigerians in the informal economy, retirement is often not a destination, it is a fear. It is a phase of life clouded by uncertainty, vulnerability, and economic insecurity. And it is not limited to informal sector workers, as I said. Yet, no society can truly claim to be inclusive when those who power its markets, the farms, the workshops, the transport systems, and the small enterprises are excluded from financial protection in old age. The informal sector is the visible engine of the Nigerian economy. It is vast, it is resilient, it is entrepreneurial, and extraordinarily energetic. It accounts for the livelihood of the overwhelming majority of our citizens and sustains economic activities across communities and sectors. Yet, paradoxically, this same sector remains largely disconnected from structured pension and insurance systems. This disconnect represents both a challenge and an opportunity. It's a challenge because millions of citizens remain vulnerable to poverty and financial distress in retirement. But it is also an enormous opportunity, perhaps one of the biggest untapped opportunities in the Nigerian financial services ecosystem. Wherever there is vulnerability, there is a role for insurance. That is the essence of insurance. Wherever there is income, however small or irregular, there is a basis for long-term savings and pension inclusion. The future of pension and insurance growth in Nigeria may well depend less on boardrooms in major cities and more on how effectively the industry can connect with traders in our markets, artisans in our communities, the transport operators, the farmers, the micro-entrepreneurs, and the vast army of self-employed Nigerians who constitute the backbone of the economy. In addressing this field, therefore, I will focus on the phenomenon of the informal sector within the broader context of Nigeria's insurance and pension ecosystem. Specifically, I will examine the challenges of integrating the informal sector workers into pension and insurance frameworks, the immense opportunities in the sector presents for operators, the strategic imperatives for industry players, and the policy and regulatory priorities necessary to deepen inclusion and build trust. Ultimately, this conversation is not just about new retirement products. It's about restoring hope, strengthening resilience, promoting financial dignity, and building a society where hard work in active years can translate into security and peace of mind in later years. These are the things that will constitute the thrust of this presentation. In order to unlock the next frontiers for pension and insurance growth, Nigeria's informal sector represents the single largest untapped retirement protection market in the country's financial system. It's a sector of enormous economic significance, accounting for over 90% of employment, contributing more than half of national output by several estimates. Yet, despite the scale and contribution to economic activity, the overwhelming majority of workers within the sector remain outside the formal pension and insurance ecosystem. This disconnect presents a profound economic, social, and commercial paradox. Nigeria has one of the Africa's largest working populations, but millions of economically active citizens are approaching old age without pension security, annuity protection, life insurance, health coverage, or structured long-term savings arrangements. Retirement for many informal sector workers still remains continued labor into old age, dependence on children and relatives, liquidation of personal assets, or outright poverty. And these days, it's not easy to bank on the fact that the children will take care of you, because even the children themselves are struggling. So there's no guarantee. So that is why many informers, they work and work till the very last. That is the challenge that we are dealing with as a country. For pension fund administrators, insurance companies, micro-insurance operators, insurtech firms, and regulators, the implications are far-reaching. The informal sector is no longer merely a financial inclusion conversation. It is now the primary growth frontier for the pension and insurance industries in Nigeria. The future scale, relevance and sustainability of the pension and insurance sectors will depend substantially on their ability to penetrate the informal economy. Nigeria's informal economy is extraordinarily diverse and dynamic. It comprises market traders, transport operators, smallholder farmers, micro retailers, tailors, mechanics, digital entrepreneurs, food vendors, commercial drivers, construction workers, technicians, freelancers, domestic service providers, and millions of nano and micro enterprises operating outside the formal corporate structures. Recent labor market statistics indicate that informal employment accounts for approximately 92 to 93% of total employment in Nigeria. This effectively means that the vast majority of Nigerian labor force lacks access to structured retirement protection. This scale of exclusion is staggering. PECOM estimates suggest that more than 75 million informal sector workers remain outside the pension net. Insurance penetration is similarly weak. Nigeria's insurance penetration ratio remains among the lowest globally, estimated at barely between 0.3 to 0.5% of GDP. While only a very small proportion of adults possess any form of insurance cover. And the president of NCRIB also alluded to this, and I'm happy that it is one of our cardinal commitments and objectives as president of that very important body. This situation has serious economic and social implications. Millions of households remain vulnerable. They are vulnerable to old age poverty. They are vulnerable to health emergencies. They are vulnerable to income disruption. They are vulnerable to disability shocks. They are vulnerable to funeral expenses challenges. They are also vulnerable to inflation-induced erosion of savings. These are major vulnerabilities for people in this sector. The burden of social protection therefore continues to rest heavily on families, on communities, and informal support systems. That is what we are seeing now around the country. The support systems are coming from friends, from relations, from families, but unfortunately, because the economy is what it is, even those who should support are also struggling to be able to stand, which makes it even more challenging. Ironically, the same sector that appears financially excluded also possesses some of the strongest foundations for scalable pension and insurance expansion. The informal economy is characterized by high economic activity, strong transactional culture, deeply entrenched savings behavior, rapid mobile phone penetration, expanding fintech adoption, strong cooperative networks, large association-based ecosystems. The challenge, therefore, is not the absence of financial activity. The challenge is the inability of formal financial institutions to design products and distribution systems that align with the realities of the informal sector economies. So the point we are making here is that the informal sector is already well organized. Sometimes in my constituency, when people say this is organized private sector, it presupposes that the other segments are not organized. That is not correct. The informal sector are very organized. They have structures, they have hierarchy, they have very strong discipline in many informal sectors, and they have a lot of creativity. In those days when I was riding my Volkswagen Beetle, I bought it second hand. And that was always giving me problems. It took the creativity of all these mechanics and wire to be able to sustain the vehicle for a number of years on the road. When I was happy, because each time I ran, you know those kind of vehicles when you run it to go slow, then you begin to sweat because the vehicle cannot survive any serious traffic. You have to be pressing the throttle every other minute, otherwise the thing will go off. So when I complained to the rewire, he said it is a coil. I said, what are you going to do? Because you know, Volkswagen doesn't have radiator. So I have to be opening the back so that air can be blowing into the bit. So he brought out the coil. He got a container. We put water. We put sand first in the container. He now put the coil inside the container. He now put water in the container with the sand. So it was that sand with the water that was cooling the coil. And since then I never had, once I put water in that container, the vehicle is good to go. That is the kind of creativity that is, and they have been able to solve a whole lot of problems. You know, and they have been able to also make things possible for a lot of people. So it's a very, very valuable sector, and we need to reckon with them more because, unfortunately, they are not being regarded. There is no support system for them. In fact, sometimes the government sees them as a nuisance. The task force is all over them, arresting them, chasing them. There is nowhere to play. No proper location for them to stay. Many of them are squatters under the bridge here and there. I think we need to have proper conversation on the importance of this informal sector, and they need to respect them, and they need to relate with them with dignity, because they are playing a very, very strategic role in our economy. Now, the reasons why informal sector retirement security remains weak. Product architecture has been fundamentally misaligned. I'm talking now about our institutions in insurance and pension. Traditional pension and insurance models were largely designed around formal employment structures, where workers earn stable monthly salaries and contributions can be deducted automatically through payroll systems. The informal sector operates very differently. Their income streams are irregular. Sometimes their incomes are seasonal, depending on the sector. Sometimes the incomes can be very volatile. They are also transaction-driven, and sometimes their incomes are just daily or weekly in nature. Many artisans, traders, and transport workers do not earn fixed monthly incomes. Their cash flows fluctuates with market conditions. Weather patterns, inflation, exchange rates, pressures, and seasonal demand cycles. Consequently, rigid contribution structures built around fixed monthly remittances are fundamentally unsuitable for a large proportion of informal workers. So for those of us in the industry, we need to take note of this very important point. Now, at the time I was speaking to the electrician that used to help me fix electric issues, and he was complaining that they are not having people to support them. All these young boys are not willing to learn it. And I said, why? He said the point is that when they have a job now, they are not sure when the next job will come. It's not always guaranteed. But if you are an Okada rider, there's cash flow, there's liquidity. Every day, something must come. So he said a lot of these artists are migrating into the Okada business because of cash flow and liquidity. And that is, at least people must take Okada or you take them. So when you talk of cash flow and liquidity, that is guaranteed. But if you are in the core business of the electrician, you are a So these are some of the dynamics that characterize this space. This structural mismatch has significantly constrained adoption. Then there is the issue of trust deficits, which is a major constraint. Trust remains one of the biggest barriers to pension and insurance penetration in Nigeria. Many former sector workers remain skeptical about formal financial institutions because of weak claims experiences, failed investment schemes, delayed benefit payments, regulatory distrust, and poor customer service. So for those of us in the industry, we need to pay special attention to the issue of trust. Because anything in the financial services sector, the pillar is trust. Once the trust is broken, the system cannot stand. Then there are also limited understanding of pension structures, then historical failures of public institutions. Insurance in particular, with due respect to our insurance practitioners there, continues to suffer from credibility challenges within low-income communities. Many still perceive insurance an instrument that collects premiums but often resists claims. We need to change that perception. Without strong trust architecture, large-scale penetration will remain very difficult. Then there is also an issue about weak financial literacy and low retirement awareness. Retirement planning culture within the informal sector remains weak. Many workers focus on that and understandably on immediate survival needs rather than long-term financial security. Concepts such as compound savings, longevity risk, inflation erosion, annuities, risk pooling, retirement, income planning remain poorly understood across significant segments of the population. This partly explains the preference for physical assets. That is why many of the people in the informal sector will rather go and invest in landed property for old age. Some of them invest in livestock, particularly up north. Inventory, people invest in gold, Then you have these informal thrift systems over formal retirement savings. There's also the challenge of macroeconomic conditions, which have reduced savings capacity. High inflation, currency depreciation, weak purchasing power, and rising living costs have significantly constrained disposable incomes. Food inflation, transportation costs, energy prices, housing costs have all risen sharply in recent years, weakening the ability of low-income households to commit to long-term savings arrangements. Inflation is particularly destructive to long-term savings culture because it weakens both purchasing power and confidence in future value preservation. When households struggle to meet present consumption needs, long-term savings behavior naturally comes under pressure. So this macroeconomic environment poses a serious challenge to pension mobilization within vulnerable income groups. This is a major challenge. We had these reforms, yes, we agree the reforms are necessary and all of that, but the social impact has been terrible. How do you talk to somebody who is struggling to survive? How do you talk to such a person about savings? In fact, he'll be looking at you as if you don't even know what you are saying. Because he's struggling to feed. He's worrying about transportation. He's worrying about school fees. He's worrying about house rents. And you are talking about savings. Where is the savings going to come from? So this is what the macroeconomic situation has also done. So the macroeconomic situation has also contributed to this problem that we are discussing. So it needs to be stabilized so that at least people can have some solid income, that after meeting, basically they have some discretionary income that they can also spend on other things and also save. Notwithstanding all of this, the opportunity remains enormous. Despite these challenges, the informal sector still represents one of the most commercially attractive growth opportunities for pension and insurance firms in Nigeria. We have demographic advantage. Nigeria possesses one of the youngest populations globally, with a rapidly expanding labor force entering economically productive years. This demographic profile creates enormous long-duration savings opportunities for pension managers and insurers. Even modest penetration improvements could unlock a whole lot of things. It could unlock massive assets under management. It could unlock expanded premium pools, stronger domestic institutional capital, greater long-term infrastructure financing capacity, deeper capital market liquidity, and long-term economic implications are quite profound. Then we have the existing informal savings culture that we can leverage. Just as I said before, the informal sector already has structures. Even before we had banks, we already have thrift collectors. Our alajo, Baba alajo, Iya alajo. All of us will be able to see them in the marketplace. And what they do is daily collection. They align their model to the cash flow of those who are doing the business. So it's very easy for them, people to part with 500 naira, 1,000 naira every day, than to wait until the end of the month and ask them to bring 10,000 or 20,000. So for those of us in the insurance and pension sector, we need to leverage those sectors. Contrary to common assumptions, informal workers already have extensively savings mechanisms, which include the SUSU systems. We have cooperative societies. We have rotational savings schemes. We have religious contribution structures in many churches and mosques. There are also those structures where people contribute money. We have trade association levies. We have community thrift arrangements. The real challenge, therefore, is not about creating savings culture from scratch, but to formalize, digitize, and institutionalize existing savings practices. Then there is also technology which has come into the space. The technology has changed the economics of inclusion. Because what people often complain is that the cost of administration of small savers is very huge and insurance. But with technology, those costs have come down significantly. The emergence of fintechs, mobile payments, agent banking, and digital wallets has fundamentally transformed the economics of financial inclusion. The traditional argument that serving low-income customers is too expensive is becoming increasingly obsolete. Today, technology enables low-cost onboarding. It enables digital KYC verification, automated collections, real-time contribution tracking, mobile claims, USSD-based engagements, AI-driven customer profiling. This dramatically reduces customer acquisition and servicing costs. Nigeria's rapidly growing digital payments ecosystem therefore presents a historic opportunity for pension and insurance expansion into the informal economy. Now for our regulators, and this is for financial firms and of course insurance companies. We need to redefine product design around the informal economies. I alluded to this earlier. The industry, that is insurance and pension, must fundamentally rethink conventional product structures. Success in the informal sector will depend on flexibility, on simplicity, and behavioral alignment. Products in this sector should permit daily contributions, weekly micro savings, seasonal deposits, event-based funding, irregular contribution cycles. Workers should be able to save 1,000 daily, 500 daily, 5,000 weekly, small small digital wallet deductions, percentage-based transaction contribution. Micro contribution systems significantly reduce the psychological entry barriers. And what I mean by that is that if you say somebody should join a savings scheme, and you say the minimum is 10,000, 20,000, 50,000, you're already putting a barrier. But if you say that daily, bring 1,000, bring 2,000, bring 3,000, you don't have to, the technology, this is, you don't have to go around like the Baba laptop to be collecting it. There are now better technology means to enable that kind of thing. So we need to bring down those psychological entry barriers. Then we need to ensure product documentation, onboarding procedures, and claim processes must also become radically simpler. Complexity discourages inclusion when a system is too complex. Look at the rate at which, let me just mention them. At this all this fintech, OPay and MoneyPoint. Look at the rate at which they grew. Many of them have overtaken all these big banks. And what did they do? First of all, they targeted most of this informal sector that we are talking about. Secondly, they reduced the complexity. It's very simple, it's very easy for you to get on board. Look at their turnover. One of them reported that in 2025, the transactions they recorded was over 400 trillion naira. Not billion, trillion. All these money points they are seeing. How many banks have been able to do that kind of turnover? So there's a whole lot of potentials in this place. But you know, when we make things too complex, people just walk away. You want to open an account, go and bring NEPA bill, what is your mother's day, bad day, where do you come? You know, go and bring all sorts of problems. So when the wahala is too much, the guy will just walk away. And that is why one of them are now, you know, pay, all sorts of things are now creeping up, eroding the consumer base of the traditional banks. So we need to embed pension and insurance products into existing ecosystems. Just as I said, we need to relate with market associations, cooperative structures, agricultural value chains, ride-hailing platforms, POS, agents, networks, digital marketplaces, transport unions, mobile money ecosystem. These are things we can leverage on as well. So this approach lowers customer acquisition costs while leveraging pre-existing trust system. For example, transport workers can contribute through daily ticketing systems. Farmers can make seasonal pension deposits after harvest cycles. Traders can save automatically through digital sales platforms. Cooperative members can embed pension deductions within thrift collection. The most successful firms, I'm talking of pension and insurance now, will be those that integrate themselves invisibly into existing economic behavior. Because you already have those structures. The fintech have done a lot of heavy lifting as far as economic inclusion is concerned. So we can leverage those. Then we also should prioritize hybrid products, that is putting a lot of products together. We are not selling just one product. Pure retirement products will struggle to attract low-income workers facing immediate economic pressures. Insurance and pension firms should therefore adopt hybrid models that combine retirement savings, life insurance, accident cover, pet support, funeral assistance, disability protection, and emergency liquidity features. So we should not just marketing one, we should combine. That is the whole essence of this particular. Immediate value protection products can serve as powerful entry points into long-term retirement participation. This approach improves retention and strengthens customer confidence. Then we need to build trust. Again, we cannot overemphasize the importance of trust. When we are talking about pension and we are talking about insurance. Trust is the currency of insurance penetration. Nothing destroys market. But we have a balance, because that is the basis for trust. The industry must aggressively improve on claims turnaround time, transparency, customer communication, documentation simplicity, dispute resolution systems. A positive claims experience within a market association or cooperative can trigger rapid word-of-mouth adoption across the entire communities. If people have good experience, they will spread the story. If they have bad experience, they will spread it faster. So we should ensure that they have good experience so that the story can go well. Then we should also leverage data analytics and digital intelligence. Data-driven engagement has become increasingly critical. Firms will deploy analytics to understand behavioral patterns, predict contribution cycles, design sector-specific products, improve customer segmentation, detect early lapses, and improve retention. The informal sector should no longer be viewed as unstructured. I mentioned this earlier. It is increasingly data generated through digital transactions. We need to develop sector-specific products. There is no one-size product that fits everybody. The risk profile varies from sector to sector. So we need to design something specific, customized, bespoke to farmers, to commercial drivers, to market women, to the artisans, to the fishermen, to digital entrepreneurs, to the cattle bearers. Product customization is therefore essential. Agricultural workers may require seasonal contribution structure linked to harvest cycles. Transport workers may need accident-focused protection. Traders may prioritize inventory and health-related risk coverage. Sector-based specialization will improve product relevance and adoption. I will soon round up, Mr. Chairman. I know I'm taking a long time. I will round up shortly. Policy and regulatory priorities. These were our regulators. We need to strengthen incentives for informal sector participation. So we need policy support. This is not only about the operators. The regulators also need to support this initiative. Government policy must move beyond advocacy into active incentivization. Potential interventions should include tax credits for micro pension participation, government co-contribution for low-income contributors, matching savings incentives, pension contribution subsidies for vulnerable groups, regulatory support for digital onboarding, and simplified KYC requirements for micro products. Global experience shows that voluntary pension participation among low-income workers improves significantly when supported by targeted incentives. We also need to accelerate digital identity and financial inclusion. We are talking here about NIN, BVN, mobile wallets, digital addresses, payment system. This will significantly improve onboarding, contribution tracking, fraud reduction, and claims verification. Digital identity infrastructure is now central to scalable pension and insurance inclusion. We also need to establish a national retirement literacy campaign. All of us have to be involved in this campaign. And this will involve PENCOM, NICOM, PFAs, insurance firms, fintechs, and trade associations. Religious institutions, national orientation agency, media organizations, all of these groups should be part of the sensitization to create awareness. So as I conclude, I will say that Nigeria's informal sector presents the most important expansion frontier for the pension and insurance industries in the coming years. The scale of exclusion is enormous, but the commercial opportunities are even greater. Millions of economically active Nigerians currently operate outside the structured retirement protection systems despite generating substantial daily income activity. Yet, the sector possesses strong transactional culture, entrenched saving behavior, expanded digital connectivity, robust association structures, and massive aggregation potential. The challenge before pension and insurance operators is therefore not merely one of product availability. It is fundamentally about trust, about distribution, about behavioral alignment, about affordability, about flexibility, about digital innovation and ecosystem integration. The firms that will dominate the next phase of industry growth will not necessarily be those with the largest capital base. They will be institutions capable of redesigning financial protection around the realities of the informal sector economies. Ultimately, expanding pension and insurance inclusion within the informal sector is not merely a commercial opportunity. It is a social protection imperative. It is a poverty reduction strategy. It is a financial inclusion priority and a critical pillar for long-term economic resilience and inclusive national development. I want to thank you all very much for your attention. Thank you very much.